Solana posts, 1 beer spot ETF milestone, European asset manager allocation. Solana's official X account published a status update on May 17th listing several ecosystem milestones, including $1 billion in cumulative spot ETF assets, a Solana allocation from Europe's largest asset manager, and a new partnership with the Perpetuals protocol. SOL traded at 86.49 at the time of writing, up 0.27% on the day, but down 7.79% over the trailing week per CoinMarketCap data. A $1 billion mark across spot ETF vehicles. The headline figure from Solana's post is $1 billion in spot ETF assets. U.S. Solana spot ETF products began trading earlier in 2026 after the SEC cleared the first wave of applications, with multiple issuers competing for institutional and retail allocations. The Solana account did not break out which issuer accounts for the largest share, nor did it specify whether the $1 billion figure reflects gross creations or net assets after redemptions. SpendNode is watching for the next round of issuer disclosures to clarify the flow direction. For context, Bitcoin spot ETFs cleared the same $1 billion mark within their first weeks of trading after launching in January 2024. Ethereum spot ETFs followed a slower trajectory. Solana's pace will become legible once monthly issuer breakdowns land. A European asset manager picks Solana. The post also flagged an allocation from Europe's largest asset manager. Solana did not name the firm in the public-facing tweet, nor did it disclose the size or structure of the allocation. Europe's largest asset manager by assets under management is typically identified as Amundi, the Paris-based subsidiary of Crédit Agricole, which oversees more than 2 trillion euros in client assets. The structure matters. An asset manager can gain Solana exposure through several paths: a direct treasury position, an allocation to a third-party spot ETF, a basket fund holding multiple digital assets, or a tokenization partnership using Solana as the settlement layer. Each path carries different signal value for the broader institutional adoption thesis. Without the specific vehicle disclosed, the post should be read as marketing surfacing of a real allocation rather than a fully detailed institutional commitment. Perpetuals tie-up. The third item in the post highlighted a partnership between Solana and a Perpetuals protocol. Perpetual futures trading on Solana has been one of the network's fastest-growing categories, with on-chain venues including Jupiter Perps and Drift competing alongside derivatives-focused chains like Hyperliquid. The specific protocol referenced by Handel in Solana's post is part of a competitive set that has been pulling perpetual futures volume away from centralized exchanges. Solana's appearance in that part of the stack has been one of the more durable use cases for the network during the recent broader crypto drawdown. Market backdrop Sol trades near 86.49, with a market capitalization of roughly $50 billion as of May 17, 2026. The token is down 7.79% over the past week, lagging Bitcoin's 3.4% decline and Ethereum's 5.96% drop across the same window. The Crypto Fear and Greed Index sits at 42 in neutral territory. The broader U.S. spot crypto ETF category has been bleeding capital in May. U.S. Bitcoin ETFs shed roughly $1 billion in a single week as inflation fears drove institutional outflows. Against that backdrop, a Solana spot ETF complex sitting at $1 billion in assets represents real capture for a product category that only began trading earlier this year. Caveats and open questions. Solana's tweet functions as an ecosystem status update rather than a press release. It does not disclose flow direction, break out which issuer's product accounts for the most assets, or specify the structure of the European allocation. Investors weighing the SOL exposure should check issuer-level filings for the underlying breakdown when those land. The $1 billion claim is also a snapshot. Spot ETF assets move with both flows and the underlying token price, so a falling SOL price can shrink the assets figure even when net flows remain positive. With SOL down 7.79% on the week, some of that AUM compression is already in the numbers. Solana on two surfaces. For end users, the two adoption surfaces sit on opposite sides of the spending question. Solana native cards, such as Solflare and Cast, let holders spend SOL directly from a wallet they control, with conversion handled at the point of sale. ETF wrappers run in the other direction, parking SOL inside a regulated brokerage account where it stays put. Both surfaces grew in parallel through the first half of 2026.